Welcome to Mass Financial and Geopolitical from a Frontier. Thank you kindly for stopping by. It's always appreciated. We've now uploaded the Mindspeak session with the central bank governor in two parts. One was his actual presentation, and in the second part is his response to the various questions that were thrown at him. I was looking through YouTube and I came across a tremendous lecture series. I put the link up. It's George Soros, if you're interested in the financial markets, very prescient, talking about problems which we've deferred for now a very long period of time, worth listening to. I visited Savo East a couple of years ago, and by the side of the road as we were driving, there was this wonderful situation where there were all these wild white flowers. I'll put up a photograph. It's a wonderful park, wild, enormous. There's never anyone else there but you, which always makes a big difference. So it was a very small beginning, but it caught fire. Chinua Achebe. You don't see eternity except in the grain of sand, or history except at the family dinner table. James Merrill, The Paris Review. Now, if you haven't ever watched Adam Curtis, I can't recommend him highly enough. And I was watching, again, something called The Trap, and I was watching part 3. Take a look. The untold story behind Saudi Arabia's 41-year-old US debt secret. Interesting piece in Bloomberg, how a legendary bond trader from Salomon Brothers brokered a do-or-die deal that reshaped US-Saudi relations for generations. Failure was not an option. July 1974, a steady pre-dawn drizzle had given way to overcast skies when William Simon, newly appointed US Treasury Secretary, and his deputy, Jerry Parsky, stepped onto an 8 a.m. flight from Andrews Air Force Base. On board, the mood was tense. That year, the oil crisis had hit home. An embargo by OPEC's Arab nations, payback for US military aid to the Israelis during the Yom Kippur War, quadrupled oil prices, inflation soared, stock market crashed, and the US economy was in a tailspin. Saying the goal of that trip was to neutralize crude oil as an economic weapon and find a way to persuade a hostile kingdom to finance America's widening deficit with its newfound petrodollar wealth. That's how the deal was struck. The basic framework was strikingly simple. The US would buy oil from Saudi Arabia and provide the kingdom military aid and equipment. In return, the Saudis would plow billions of their petrodollar revenue back into treasuries and finance America's spending. Nothing much has changed. By 1977, Saudi Arabia had accumulated about 20% of all US treasuries held abroad, according to the hidden hand of American hegemony. Traders are now convinced that Saudi Arabia will devalue its currency. I think that's a foregone conclusion, but the timing is always key in these matters. I put up a photograph of President Nixon walking with Saudi King Faisal in Saudi Arabia in June 1974. We've seen Donald Trump's type of populism in Africa. It always ends in tears. Saying that unsurprisingly Trump has said little about Africa unless you count his supporters yelling, "Go back to Africa," at black protesters. It all sounds eerily familiar. Africa's post-colonial leaders excelled at appealing to the basest sentiments in their people. The African continent has had its fair share of populists and demagogues. We have an entire generation of books, fiction and fact that document the rise and ruse of those who will say anything, promise everything, and ultimately do nothing. The eventual end of colonialism in Africa in the 60s led to many post-colonial leaders without the intellectual depth, policy chops, or intrinsic character to confront the complex task of modern governance. They instead excelled at appealing to the basest sentiments of their people. Typically, these leaders position themselves as strong men, able to stand up to Western imperialism and protect the interests of their citizens. Such leaders usually parlayed a vacuous insistence on nationalism into xenophobia and clannishness to help them to electoral success, after which they would promptly surround themselves with an army of the narrow-minded who, unable to deliver the dividends of leadership, turned to sycophancy and ultimately corruption. Very hard-hitting. Africans have seen this happen with once promising leaders in Zimbabwe with Robert Mugabe, Cameroon with Paul Biya, and oil-rich Equatorial Guinea with Teodoro Obiang, Africa's longest-serving ruler, and in Sudan with Omar al-Bashir, all mixing up demagoguery with a sit-tight government. We've seen it in the circus show of the Gambian presidential villa, where President Yahya Jammeh says he can cure AIDS on Mondays and Thursdays, accuses his opponents of witchcraft, and made a promise to transform his country magically into an oil-producing kingdom. A nation, promise he, of course, has been unable to keep. The OECD is not optimistic, as 2016 world growth seemed flat at 3%. JP Morgan's global manufacturing PMI, an anemic 50, signifying worldwide stagflation, developed markets to blame. Food for thought, the US yield curve has flattened to 92 basis points, the flattest since December 2007. Let's move on to the currency markets. The euro has topped 112.12 last, dollar index 95.33, Japanese yen 109.04, Swissy 0.9881, the pound 144.30, 144.46 now, the Aussie 0.7232, India rupee 67.265, South Korean won 1187.46, Brazilian real 358.79, Egyptian pound 8.88, South African rand 15.5744. Dollar yen, the yen surged, got below 109, it's back above it at 109.03. Bank of Japan member says Bank of Japan will not reach its 2% inflation target during the projection period. Well, that was obvious to everybody by now. Japanese government bond yields are negative out to 10 years. Dollar index, I'll put up a 3-month chart. As long as we're above 93, I remain constructive. Gold, 1216 last. Remember, we were above 1300 not too long ago. Oil price up this morning ahead of this OPEC meeting. It's up 29 cents. But it's sort of reasonably steady. Brent is trading around 50, and there is a double top formation in Brent around 50.70 and 50.80, so let's keep an eye on that. I'm not confident that this rally's got any more legs. South Africa, let's move on to Africa. I like this image of somebody in one of the townships. The South African all shares up 5.57% this year. That's all about the weak rand translating foreign earnings into more rand. Dollar rand, I'll put up a chart, 15.57. Egyptian EGX 30 up 8.08% this year. There's a sense of exasperation amongst investors, said Ronak Gopal, a Johannesburg-based analyst at Rand Merchant Bank. There's still a level of goodwill toward Buhari and his government, but it's dissipating. The man on the street is really struggling. The Nigerian all shares down 6.05% this year, and it was at a 6-month high before Tuesday's correction of 2.75%. The banking index fell 6.9%, biggest retreat since January the 15th. And I think essentially the market was shocked by the body language of the president from this weekend broadcast when he mentioned that he was encouraging the CBN to initiate a flexible foreign exchange market regime, but also said he was against devaluation. There is speculation that devaluation might not happen. The market got pulled up, particularly the equity market, and suddenly fought again. Ghana Stock Exchange is down 12.2% this year. Power struggles stalled South Sudan's recovery from war, and it still remains a big mess, now saddled with fees and debt repayments totaling about $25 for every barrel of crude exported via Sudan. And facing low oil prices globally, South Sudan is desperately short on hard currency, desperately. President Abdelaziz Bouteflika fired his central bank chief in Algeria. That was over the weekend, day before yesterday. The Ivory Coast is trying its ex-first lady for war crimes. This is Gbagbo's wife, Simone Gbagbo. A lot of people complaining that it's a very partial prosecution because none of Ouattara's people were caught up in this dragnet. President Kenyatta held talks with President Park Geun-hye of South Korea. She was visiting this region, and we have now President Erdogan in the region as well. Monday, mayhem in Kenya raises spectre of renewed ethnic strife. Nairobi residents have a new reason to dread the start of the working week street demonstrations. The government has the situation contained, but at the same time the protests have spread outside of Nairobi. If there's an increase in intensification of the protests for another 6 months, Kenya is going to face a very difficult situation. Political risk remains relatively low by Kenyan standards, given that the Jubilee coalition is unified while CORD is facing divisions. This was exotics. Violence could intensify if the opposition's concerns aren't addressed, and thus far the government has been playing hardball, according to the International Commission of Jurists. Some Jubilee leaders have indicated they will mobilize supporters to run counter-demonstrations against CORD. He said, if that happens, that will be a perfect recipe for anarchy and chaos. And this is a concern. It's spread geographically and in intensity. It needs to be taken off the street. An interview I did with Bob Collymore of Safaricom on the day he released his full year results. Please take a look at it. The FT has written about Kenya's nascent mining industry being set to boom. I'll just read you a couple of paragraphs. Huge bulldozers pushing tons of earth off an escarpment into hoppers at Base Resources' titanium mine near Kenya's southern coast look more like remote-controlled toys in a giant sandpit than the country's largest mineral operations. The national picture for the sector is arguably even more gloomy. The $300 million facility owned by the Australian and London-listed Base Resources is not only the biggest mine in East Africa's largest economy, it is the only one of its size. Landscape appears on the cusp of change. President Kenyatta signed a new mining act into law this month that can see Kenya's nascent mining industry finally come into its own. Oil companies led by Tullow have been prospecting in Kenya for years and expect to start production by 2021. But with a mining law passed in 1940 and geological data that was often 32 years older than that, Kenya missed out on the mineral exploration boom of the last commodity supercycle that benefited neighbours Tanzania and Uganda. They've been constructive. Talking about Dan Kazungu, the ebullient mining minister, has written a 20-year strategy that he hopes will see up to 20 more operators, such as Base Resources, in the next 15 years. Government revenues from mining and mineral operations were just $16.5 million in the last financial year. However, Mr. Kazungu expects these to be more than doubled by June. Has set a goal of 10% of GDP by 2030. You can feel we're in the starting gate. Everyone involved is wanting to get things moving. That's Tim Carstens. Mr. Soros says Mr. Kazungu has been very accessible. He's going about it in the right way. Indeed he is. I've got to give him credit. Let me put up a photograph of a bare battery that Base Titanium kept. It must be hundreds of years old. And then this tweet, Base Titanium safety is the base way. Car in General reported first half earnings per share surged 144.186%. Very impressive, but they call the period challenging, cited the December devaluation of the Southern Sudanese pound as another thing. But look, these were much better results than previously, and that's even notwithstanding a very realistic company commentary. KCB and the Kenya Deposit Insurance Corporation plan to hire forensic auditors to conduct investigations into the affairs of Chase Bank prior to its collapse. We will have a competitive process to select an independent auditor. This is because KDIC and us. This is between KDIC and us. Talk is that the losses are considerably bigger than first declared. Kenya shilling 100.85, Nairobi all share closed at a 12-week low, minus 1.43% this year. The Nairobi NSE 20, minus 5.27% so far this year, closed at a 14-week low. Once again, thank you for stopping by. I'm always grateful.